Welcome to Talking Success, the podcast series that focuses on everything fintech. I'm your host, Darren Franks, and each week I'll be joined by a series of experts in the field who have a wealth of knowledge to share. It's time to meet this week's guest, so grab a coffee and let's start talking success.
Hi everyone, welcome back to another episode of Talking Success. I'm delighted to have with me today Tawanda Chatikobo. Tawanda and I met very briefly at an event a few months ago in Johannesburg, and he was doing this talk on digital banking and the future of banking, and I was blown away by his charisma and his energy, and I just thought, I've got to have this guy on our podcast. So I'm super delighted he's joining us today. I'll hand over quickly to him to give you a quick intro, and then I'll try and unpack what we're going to discuss today. And there's a hell of a lot. So Tawanda, good to see you. Thanks for joining. And hope you brought all your charisma and energy with you today on a Friday afternoon.
Thank you. I will try, right? But quick intro into myself. As you said, my name is Tawanda Chatikobo, and I'm currently the head of digital strategic execution and next frontier banking at Nedbank. Fancy title, but basically I'm responsible for getting cool stuff onto our digital platforms, stuff that our clients want, stuff that our users need. Then most importantly, keeping a future view in terms of what's coming down the roadmap or down the stream, as it were, that we can then integrate into our channels and deliver that experience to customers. So essentially, that's what I do from a day to day. But listen, Darren, thank you for the invite. It's really amazing to be here. And I'm looking forward to the next, hour or so we have together. So that's going to be pretty cool.
However, I mean, we recorded one with Kamara from the Banking Association, and we were like, listen, 20 minutes, half an hour. Okay. We ended up doing an hour, splitting it into two releases. So we're never quite sure how these are going to go.
See how it goes, right?
For everyone that's tuning in, I mean, for everyone that's tuning in, this is not scripted at all. Tawanda has no idea what I'm about to ask him. So we'll sit back, grab a coffee, and kind of enjoy the conversation.
Let's see where it goes.
Let's see where it goes. So let's start, right? We saw each other March.
Yeah, this March.
Right?
Yes.
6-7 weeks. Mm-hmm. And a fair bit's happened since then, right? I was thinking about this last night as I was kind of planning for this and thinking, what can we discuss? So we've had the collapse of regional banks in the US.
Correct.
We've had...
Which came out of nowhere, by the way, right? If you're from the outside looking in. But from the inside looking out, it was bound to happen because you had some pretty bad bets made on cheap money and lots of cheap money. You take that away with interest rates, it was going to happen sooner or later. I'm just glad that it happened. It was contained in SVB. The Federal Reserve, the federal government stepped in and was able to backstop that loss, because that could have gone into some serious contagion, and you and I's conversation would be very different today. So yeah, that came out of nowhere.
Yeah, but you look at the amount of fintechs in Africa that are banked because they've got Delaware sort of HQs and holding companies that were banking with the bank and thinking, the news broke. It's like who's going to suffer from this? But I'm glad.
So it was mass panic, right? I say this because I'm actually an angel to a fintech that's based in Kenya and in South Africa, and I was WhatsApping the founder on the day before, because I think it broke on a Friday, right? I think it was WhatsApping on a Sunday saying, listen, mate, is there any exposure here? And as we were talking, he's like, no, we're cool, no exposure. But I think the penny dropped for him about how important it was for him to communicate with his investors and his customers that even though they're based in Nairobi and Johannesburg, on the other side of the globe, there was no contagion from SVB. So you may ask, why would there be any sort of contagion? Because, to your point, Y Combinator, which is one of the biggest incubators and startup, incubation houses out there, actually did a lot of work with SVB. So a lot of startups across the globe were actually banked with SVB. So fortunately for this startup, not the case, but there definitely was a contagion across the startup ecosystem. The question then becomes going forward is that what does that then mean for the startup ecosystem? Are we going to see a reduction in startups? Are we going to see a much bigger risk aversion, which means we can't take any risky bets anymore? Now, from an innovation perspective, that's almost countercultural, right? Because you want to have that level of risk appetite. You want to have that level of betting on the next big thing. But will you be able to do that, understanding that now, for one, the cheap money is gone, right? And two, there's just a lot more aversion to that in the market now. And you're probably going to see the federal government, in this case, the United States government, take a closer look at how some of these banks are actually using and spending their money. So I don't know, because it's still very early stage, right? I don't know what that means for the fintech and startup ecosystem going forward. Also, I don't know what it means for big tech, right? Because we know that big tech is going through a bit of a rough time now. If you look at the FANGs, for example, we're talking reduced earnings, we're talking cratering share prices, and we're also talking job losses, right, across the board. So with this rising interest rate and a hawkish environment that we're in, I don't know what that means for the future of technology, because the key drivers that have been there have gone away, right? What drove the past 15 years was QE, right? Quantitative easing. Lots of cheap money, low interest rates. Build, and we'll figure out revenue and business cases later. Well, that luxury is gone now. So what does that mean?
Well, the investors I've been talking to over the last couple of months, so I was at an event in Nairobi as well, and it was kind of a pitch competition. And, the first question that these guys were asking of the startups that were pitching was, okay, when are you going to be profitable? Show me where you're going to be profitable, right?
And you see where the discussion's changed, right? Because the discussion used to be, what are you building?
Yeah.
Right. And when do you ship? When does MVP land in market? Now it's like, listen, we don't care about MVP. When do you start making money?
We've got the US banks on that side, and then we had Credit Suisse, which I know they've been. There's been a lot of sort of talk over the last few years about some of the sort of models that the bank has adopted, and then suddenly, poof, UBS has now acquired Credit Suisse, and you go, this is like one of the oldest banks in probably in the world. I don't know, certainly in Europe. And you go, hang on a minute, Swiss bank. What is going on here, right? So that was that side. We can touch on that if you want in a minute. Then we cross the pond and we come over to South Africa. And again, in the last 6 weeks, Payshap's just launched, right? Which is arguably a competitor to the traditional rails. Okay, it gives you another opportunity or another channel to pay without having to use a MasterCard or a Visa rail. We've had the launch of the Fintech Association, a little bit of a plug there, but that's fine. And there's just so much happening, right? And we look at even crypto, and I know I'm going to definitely come on to that because that was fascinating the way you were describing sort of crypto at the event. But I've seen what crypto has done over the last 6 weeks. It's gone up like 40%, if not something more.
It's not like that, literally, right? And which is interesting because at the event that you're speaking about, one of the keynote speakers was adamant that crypto has had its moment in the sun, right? And that crypto isn't actually the future. I think the numbers are telling us something very, very different, right? Because there's an institutional view around crypto, there's a regulatory view around crypto, then there's the everyday Joe like you and I, right? And we see a tool and an asset that's become more regularized, right? But most importantly, has some level of value from a speculative perspective. So I can go and dabble, make a bit of money, might lose a bit of money, but I can dabble, right? That in itself is always going to give you a market. And I have liquidity. People say, no, but you have the gold standard. Listen, Darren, when was the last time you had a guy walk around with a kilo of gold in his backpack looking for a buyer, all right? Gold is not liquid, all right, unless you're a big institution. For you and I, everyday Joes, crypto absolutely is liquid. I get into my app, I buy, I sell, I gain, I lose, life goes on. So so that level of just utility for a human being is never going to go away. Crypto is not going to go away.
I don't know if you've been following the sort of Ripple case, the XRP case in the States, what's going on there. And I think there was meant to be a decision or a verdict on, whether it is deemed as a security or not a few weeks ago, end of March, I think it was, 20-something of March. That didn't happen. It was delayed. And without giving away, this is not financial advice, everyone, by the way. Whatever I'm about to say here, whatever we're about to say, we're not giving financial advice.
No, same for me. We are not financial advisors. We're not FASE accredited. We're just having a conversation between mates about finance and fintech.
Absolutely. The only advice I will give you, though, is if you want to make money, whatever I do the opposite. And then I guarantee it's a guaranteed return, right? But I looked at it and I thought, okay, well, let's do some digging on sort of Ripple and XRP. And what's you use this word? What's the utility behind this? And we look at the ISO 2022, which is the standard that's coming in, which is kind of my understanding. You're probably better off explaining this than I am, but it's kind of the next iteration of Swift. And can Ripple XRP actually form part of this new way of moving money. And then you look at
as a stable coin, right? As a stable coin, because the big thing behind XRP and Ripple is that it brings stability towards a very volatile rail, right? Which is crypto. So looking at it as a stable coin. I have questions whether there's actually value in that, right? Because the whole idea of a cryptocurrency is to take it outside of the regulatory system, right? When the regulatory system or the regulated system, in this case, big banks, right, start having their own cryptocurrency, what exactly is the point then? Right? Because you've taken the main rationale of crypto away. You've taken away the liquidity. You've taken away the fact that it's a highly liquid asset, right, which I can move and trade with little restriction, right, which also talks to its volatility as well, right? And everybody knows, I'm pretty certain, the backstory to why Bitcoin became what Bitcoin is. Can you start on the Silk Road, right? If anybody doesn't know what the Silk Road is, Google it. Some fantastic books out there that'll give you a crash course on the Silk Road. But essentially, that was the basis of cryptocurrency, and that's what gave Bitcoin its critical mass, right? So I struggle then to understand, apart from just being a really cool blockchain-based use case, what a Ripple or XRP would actually bring to the cryptocurrency game, right? Is it increased liquidity? Is it decreased volatility? Is it something that a regulator, for example, could look at and say, cool, so we're kind of doing this crypto thing, right? We have the necessary ring fencing around it, with the necessary controls in place, and we're okay with this, and we hope this will eventually become the industry standard and replace Bitcoin, Ethereum. I'm not going to mention the others because those are basically joke coins, right? We're talking about the main ones here. I just need to understand. Maybe somebody can explain it better to me. Maybe your next speaker can explain it. But what is the rationale of an industry-backed cryptocurrency? And what benefit and utility does it give you, right, apart from the accepted, mass accepted coins, for example, Bitcoin and Ethereum?
Do you think there's a play there, though, for CBDC? So if CBDCs globally were running on the same network, as in the same tokenized network, does that then make it easier and faster and cheaper to do cross-border payments, right? So if I'm paying someone in Zim...
Now we're getting to, right, you start seeing a use case around cross-border payments, right? And then if it's within almost a ring-fenced ecosystem, as it were. Sorry for the digital speak, but that's what I do every day, right? If it's in the ring-fenced ecosystem, then you have the necessary controls in place to ensure you're able to move money between borders seamlessly, right? Because one of the big use cases that blockchain is applicable for is cross-border remittance, right? So, for example, if you and I want to do a transaction across borders, it's going to take a bit of a while, right? Actually, I'm waiting for a payment via TransferWise from the UK, and it's taken 2 days to hit my account. I'm still waiting, right? And then when it hits my account, even though I'm already verified, there's still a level of KYC I need to do for that money to actually then be unlocked and actually be deposited into my account. So there is a use case for that. And this is just a debate, right? This is just an academic debate. I wonder if taking the existing socially acceptable, if I could say that, mass market infrastructure under Bitcoin and Ethereum, and bringing that into the regulated system would be better, instead of the regulated system trying to build its own coin, trying to build its own rails. I don't know if necessarily that's the way to go, right? Granted, it is institution to institution, but eventually there's an end user at the end of the day, right? There's a Darren and there's a Tawanda, right? Who may not be au fait with XRP, who may not be au fait with Ripple, right? Who may not be au fait with the machinations of Swift and all the infrastructure and rails in the background. But it's very, very clear on this is what Bitcoin is, this is what Ethereum is, this is how they work, this is how they don't work. So it is a very academic debate. Hopefully not too esoteric, but I do question whether it should be the other way around. Us adding regulation and a safe playing field into the existing cryptocurrencies that are available out there, as opposed to creating our own.
It's a debate, isn't it? Because I think a lot of people, a lot of retail investors have kind of looked at, FTX, or even people that maybe have got an interest in crypto but haven't actually sort of made that step into investing in it, and have looked at an FTX and gone, whoa, okay, I'm not touching this with a barge pole, right?
But listen, SBF was a bit of a clown, wasn't he?
Yeah,
let's be honest.
But I don't think people knew that, because I'm heavily involved in fintech, but I didn't know him from Adam, quite frankly, until the news broke. So I think that kind of sticks. And if I could just move on,
So you're talking about the stigma,
it's a stigma.
right?
It
Yeah,
is a
yeah. No, I
stigma.
get you.
But something else that occurred to me last night, right? And I know you kind of want to talk about. Well, I don't know if you want to talk about it, but I'm going to ask you anyway. Open banking, right? So I was thinking about this last night, and you know what? Going on and talking about stigmas. If I say to someone, describe a bank, and what does a bank do? And they go, it's typically it's a custodian of my money, it's safe. You ask a 5-year-old, what's in a bank? And they go, oh, it's safe, and it's underground, and we've all watched Money Heist and things like that, right? It's a bank. And then we're going, hey, we've got this new thing called open banking. Just Joe blogs, people that aren't sort of in the sector go, hang on a minute, open banking? I don't want my bank opened. Literally, that's my safe haven, right? This is where I store my money. I don't want it to be opened. I don't even know where that term came from, quite frankly. I just wonder if it's a bit of an oxymoron, right? Open banking. And again, people I've had conversations with in over the last couple of months have gone, the biggest issue with that is security. And I'm not sure about, I want access, or I want other institutions to have access to my banking, information and my transactions and this and that. So I think going on the FTX thing, when you say, there's a stigma attached, I just wonder whether there's a bit of a stigma starting to become attached to open banking, because it's not necessarily, in my opinion, it's not the best term, right? And people don't really know what this means. So can you unpack it?
Yeah, no, let's have, I think it's a nice debate. Let's have the discussion, right? So I'm going to start with a question to you, Darren. What is the fundamental business of a bank? So if you ask a 5-year-old to your example, right? What is the fundamental business of a bank? What do you think it is?
They keep my money, they keep my deposits safe, they keep my money safe.
No, it isn't. It's trust.
Okay. It's trust. Okay.
The fundamental business of a bank.
I trust them to keep my money safe. But I trust them to keep my money safe.
Keep your money safe, finance your home, finance your car, keep your will safe, make sure your payments get from A to B. But fundamentally, the core business of a bank is in trust, right? And I trust this bank and this brand and this building and these people to do these specific things that are related to my money, right? But fundamentally, it's trust. Okay. What went wrong from an FTS perspective was a deficit of trust, right? Due to whatever issues they may have had there from a regulatory, ownership, strategy perspective, as well, financial perspective as well, right? The reason I'm making that point around trust is open banking, if coming from a trusted source, which is a bank, right, should work in the market. Because in that case, all we're literally doing here is exposing what's 90% already the customer's own data and information to a third party with their consent. From a trusted source to another trusted source, right? With the consent of the actual owner of the data or the user itself. There's debate there again around who owns the data, commodification of data, et cetera, et cetera, et cetera. But essentially, that's what open banking works on. It works on trust, right? And what you'll then find, to the point that I'm making, is that if that trust is housed within a institution that is well-known, well-regulated, and well-operated, then there shouldn't be a stigma at all. It's different if I come up with ABC Limited, all of a sudden I'm offering open banking. Please enter your password and your 3-digit PIN, and then you're exposed to the world. Then we have a deficit of trust. But if I'm a big listed name brand organization, okay, then that trust equation then tilts to the benefit of the user itself. So I don't think it's a stigma. I think it's a lack of understanding of how open banking works. But most importantly, what the benefits are of open banking. I think it's fantastic, right? So we know how open banking started, was PSD2 in Europe about 6 or 7 years ago, and we've seen that roll out across the world, with South Africa taking a lead in that, right? And I absolutely believe that is a fantastic opportunity for us to start putting the power of data back in the owners of that data, the customer themselves. It's my data. You just house it for me, right? And I need to expose it to X, Y, and Z. I've given you the authority to do that, and I want it to happen seamlessly so that I, as a user at the center of a digital ecosystem, all right, again, there's the word digital again, right? I'm able to have seamless experiences across various platforms because the underlying commodity that makes those platforms work, i.e. my data, right, is available as and when those platforms need it, based on my consent. How could that be a bad thing, right? The necessary guardrails are in place. the necessary security is in place, and I know how it works. How could that be a bad thing? How could I have a stigma against that?
No. I get that, right? And if I was going to a bank, right, in South Africa or anywhere else in the world, and I won't use Credit Suisse, right? Let's use another bank. I was going to, I don't know, NatWest in the UK. Right? Let's pick something that's completely out. NatWest in the UK. And they gave me an app, or I had a NatWest app, and it said, hey, I can connect my Revolut app, my RBS, my Revolut account, my RBS, my Starling account, my Monzo account, my whatever. I can have it all in sort of one view, right, on my phone. Great, 100% trust that. Okay, as you said, it's about trust. I trust NatWest to have the infrastructure, and the security, and the know-how in place to be able to handle that data, right? However, if I then go and someone says, "Oh, you've got to try this app out," it's like an all-in-one bundled kind of super app. We'll come on to super apps in a minute, right? I asked you that question a few weeks ago. When it's this super app and it's asking me to log in, and it's asking me for my username and password to my NatWest account, and then it's asking me for my Monzo account, and it's asking me for my Starling account, and it's going to bring everything together. Oh, as a consumer, I'm sitting there going, I don't know if I trust that, right? It could be a 100% legitimate business. It could be very well funded, it could be very well backed, it could have all the regulations and the licensing that it needs. I'm not necessarily going to know that, okay, as a consumer. And I think the other point about having control of your data, and we saw this a few years ago when GDPR was kind of launched in Europe. And there was this mad panic, everyone going, oh, how are we going to become compliant and what we're going to do? And I remember, in our business, we saw this influx of, data requests from people saying, you've got my data, send me your... Yeah, okay. And then these tools started coming out, and it was like, input your email address or sign up with Google, and we'll tell you who's got access to your data. It's scary. I don't know if you've ever done one, right? But it goes on for pages and pages and pages. So you say you're in control of your data, unless you're actively in control and you make a conscious effort to be in control, it can get out of hand, right? How many times do you go onto a website and you sign up for something and you go sign in with Google and you go, sign in with Google.
You just say sign, I'm in a rush, just get it done. Single sign on.
Whoever reads those terms. Whoever reads the term, right? It's like when you go to an airport and you go onto the free Wi-Fi. Yeah, it's free for a reason. They're selling your data. And if you read the terms and conditions, they tell you they're selling their data. So I do think there's perhaps a bit of lack of education around what open banking is, what the real user cases are, both from a consumer perspective, but also from a business perspective as well, right? What does that mean for a business? Not necessarily a fintech, but anyone who takes payments, accepts payments, needs credentials from customers, whether it be law firms, accounting firms, whatever it may be, to be able to consolidate all of that data together into a single view. It must be a lot easier for an auditor to be able to press one button and get every single bank account, downloaded, for their one client, rather than having to log into multiple places. So I think there's lots of reasons. Let's just bring it back to the consumer side here in South Africa. Where do you think the key benefits are for open banking for consumers at different LSMs here in SA?
So for me, the big benefit is a seamless experience across platforms. All right. So the reason why you want to open banking, and I think your example was fantastic with NatWest and Revolut and the rest, is I need to have a single home where I have access to all my financial services on one platform. All right, which may seem counterintuitive because you find every single bank has got its own interface. Every single FS has got its own interface. But there comes a time when you can only have so many apps on your phone, right? And you can see I'm leading us gently into our super app discussion as well, because it kind of goes in that direction as well, right? Around how do I have a single interface where I have access to all my financial services, all my credits, all my debts, all my assets, and everything in one view, including my crypto, et cetera, right? That to me is the future of digital experience on the continent. Because if I look at my phone, right, because I'm multi-banked from the nature of the work that I do, I can't manage 10 or 15 banking apps, updating them every month, making sure that I remember my passwords, because I can't have the same password for all 15, right? Because that's a security risk. I have to have 15 passwords I need to remember. Where am I going to store those passwords, So it's a small example, right? But that shows the absolute benefit of open banking. And again, being able to build an ecosystem of data around a single user. And whether that interface is a single mobile device or a single desktop device, but essentially I have a one-stop shop for my digital experiences. And that's where open banking comes into it.
Which I get from having conversations between you and I. We're probably quite similar in terms of we've got loads of banking apps and we've got trading accounts, we've got all this kind of stuff. And from a convenience perspective, it'd be great to have a single view. But when we look at it in the wider context of Africa, not necessarily South Africa, where we've got such an unbanked, never mind underbanked, right? Such an unbanked population.
Yeah.
Is open banking going to fill, or is it going to service financial inclusion? Is there a financial inclusion play within open banking, or is it just convenience?
So yes, and I'll tell you why, right? And I'm looking up as I kind of just formulate this thought in my mind, right? Because yes, there is a huge unbanked population on the continent, right? Africa now is about 1.5 billion people, and we see that number growing over time, right? Africa is also a cash economy, so right, about between 93 to 95% of transactions on the continent are done cash, right? That means there's a significant potential to move into digital payments, right? So when you look at some of the numbers, McKinsey did a great report, if anyone wants to Google it, came out in 2021, and they're forecasting a 40% CAGR between 2020 and 2025 in terms of payment volumes and values, right? So in terms of revenue, we're looking at growing from about 25 million right away to about 40 million over a 2 or 3 year period, and then actual transaction values themselves getting to $1 trillion over that period of time. So there is absolute potential moving from cash, right? Cash relatively close to equaling unbanked to moving on to digital, which in some cases is banked. But it may not be the formal banking as I have a bank account, but I may have a mobile wallet, for example. I may use mobile money, right?
Yes.
The reason why I'm setting that context is that from an open banking perspective, what you're going to start seeing is that, one, the driver of financial inclusion on the continent may not be a traditional bank, right? It may be a telco via a mobile money product and a wallet, right? But what you're going to start seeing is telcos becoming closely entrenched with traditional financial services providers and working off their rails, which is where the open banking piece comes into it as well. So my journey into financial inclusion may not start at XYZ Bank, but may start with XYZ Telco, right? And then obviously I build a history through my wallet. I build a history through my mobile phone behavior, how I buy my airtime, how I sell my airtime, et cetera, and then that is proxied into a credit score, right? Which then allows me to then access the full service of the full suite, of financial services from XYZ Bank, right? Now to enable that transition, that link, that's where open banking comes into it.
And that's a wrap for this week's episode of Talking Success. Thank you so much for tuning in and joining us for this fascinating discussion on all things fintech. We hope you've enjoyed this episode and have gained some valuable insights into the ever-evolving world of finance and technology. A huge thank you to our guests for sharing their expertise and providing us with some amazing insights that we certainly couldn't have done this without them. Don't forget to subscribe to our podcast and stay tuned for more exciting conversations with experts in the field. Until next time, keep learning, keep growing, and keep talking success.